Good Friday. 2018 is almost finished. Looks like we only got about 2 weeks left for the new year. With this week, we're going to talk about mortgage rates and we're going to talk about solar panels. So let's talk about mortgage rates first. Mortgage rates this week were fairly flat. We had a little bit of volatility, but it looks like we're going to end mainly flat. Not a lot of economic news out this week. We had some inflationary news come out, but it was pretty tame. We had some home information come out. It was pretty tame. So this week was fairly tame, but next week is going to be a doozy. So let's look at what happened to rates this week. So this week, rates pretty much stayed squeezed in between the 100-day moving average and the 200-day moving average. You can see a lot of volatility, which is these are candlesticks, and we had wicks and sticks. So when you have wicks and sticks, there's lots of volatility. Also, somebody asked me last week, what are these little gizmos right here? These are lock alerts. So this particular service actually gives me a heads up on if we have volatility and to lock in some rates. We're still above the 4.75% line, not quite to that 4.625% line. We're seeing rates today be volatile with the stock market. The big thing about this is rates really haven't changed as much, but yet the stock market has sold off quite a bit this week. So that means that rates are pretty well locked in here. Couple things to watch for this coming week is this is next week's economic calendar. You can see Monday not much, Tuesday not much. Wednesday is when we start really getting into the big stuff. We have existing home sales, and then we're going to have the Fed decision. So the Federal Reserve is anticipating on making a quarter point raise in their Fed funds rates. And a lot of lenders out there are going to say, oh my God, they're raising rates. That's actually good for us, because what that is that's the Federal Reserve trying to prevent inflation from happening. And inflation is bad for mortgage rates. As inflation goes up, mortgage rates goes up. So as the Federal Reserve is actually changing their rate to bring inflation down, this is actually benefiting us. So we will probably see a improvement on rates on Wednesday, as long as the Fed increases their rates by a quarter point. There is some word, especially last week, that the Fed may hold off in December and jump over into January for that quarter point increase. If that happens, we anticipate the stock market to rally big time, and then we also expect mortgage rates to actually increase. So I would anticipate that if we saw the Fed not raise rates, that we are going to probably break this Fibonacci level. We will probably break this 25-day moving average and 50-day moving average and move back into here. A couple other things that we're going to watch out for is Friday. Friday is going to be a huge day, because not only are we getting just a ton of economic information, but we're also going to be going into a long holiday weekend. So we have personal consumption expenditures. This is how people buy stuff and the inflation that they use to buy the stuff. So this is a big time number that the Federal Reserve will use in their January statement. And we will also look at personal spending. As long as people are spending in the economy is going to do good. Durable goods is an indication of how the economy is going. So when somebody buys durable goods, this is something that lasts longer than a year. So it's not toilet paper, it's not food. This is durable goods like computers, hardware devices, washing machines, stuff like that. And then we're going to get some GDP information. And then to top it all off, we got the consumer sentiment. So Friday is going to be a huge, huge day, and I expect a lot of volatility this coming week. I would probably be floating into the rate decision, and then come Wednesday, we are probably going to be in a locking mode until all this simmers down and we get past the Christmas into the following week, and stocks and bonds start trading again the following Wednesday, the 26th. Recently, I had a transaction that kind of caught all parties a little bit off guard when we got to the title report, and it deals with solar panels. Solar panels are becoming more and more popular. They're actually being required in California, and as we see solar panels come down in price and go up in efficiency, we're going to see more and more. Recently, just in my neighborhood, some guy came around selling solar panels, and I can see at least a dozen people that signed up for them. In speaking to people in the industry, it looks like a majority of the solar panels are actually leased, which means that the owners of the house don't actually own the solar panels. So let's kind of look at the title report here. You can see that on the title report, this is a lien against this particular house. It was in second position. The mortgage was actually up here. And this indicated to us that obviously the house has solar panels on it, and the fact that the solar panels are leased. So what is this going to do to affect our transaction? First thing you need to do as a realtor, either as a listing agent or a buyer's agent, is when you come upon a house that has solar panels, you need to determine if they are leased or if they're owned. We're going to go over leased first, and then we'll go over owned. On leased solar panels, we have to determine a couple different things and about 5 areas we need to look at. First area is the lease transferable? So can the existing owners of the lease transfer that lease to the new buyers? If the owners are not able to transfer that lease, then that means they've got to pay that lease off prior to closing. And that could be a kind of a gulp factor, because these sellers may not realize that they have to cut an additional check to the lease people to get the solar panels released. Now, if the lease is transferable, we have to follow some federal guidelines on that. First of all, we need to determine, is the lease equal to or better than the existing lease? The lease company cannot make terms worse. So they can't take a 30-year lease and make it a 40-year lease. And they can't make the $300 a month payment a now $400 a month payment. Next, we have to take that payment and convert that into debt to income ratio for the buyer. So we have to take that $300 a month payment, add it to the buyer's debts, and qualify them for that lease payment. Now, as we all know, most buyers are really close in their debt to income ratio. Adding a $300 lease payment to them could actually put them over that debt to income ratio. Next, we have to make sure that the leaseholder, the company that owns the solar panels, is not on the insurance binder. So when the house burns down, the homeowner insurance company will pay the mortgage company, but we want to make sure that the leaseholder is not being paid also. Also in this, we have to make sure that the appraiser does not count a leased solar panel as value, because obviously those solar panels can be removed at any time if for some reason somebody's not paying the lease. We also need to determine who maintains the solar panels. More than likely, it should be the company that has the lease and the company that owns the solar panels. Which means if the solar panels break, crack, fall off, short out, who's going to take care of it? It needs to be the company that owns the lease, not the homeowner. In conclusion on the leasing, we just got to make sure that we get all the facts and all the documentation ahead of time in order to make a accurate underwriting guideline and an accurate determination on where the lease is going. Now let's go over if the solar panels are paid for. Either they're paid by the seller at closing or they were paid outright. First and foremost, title needs to ensure that there's no existing mechanics liens. In this circumstance, it might be behoove of everybody to add a equal policy onto the title policy in order to make sure that there are no outstanding liens or judgments for these solar panels. The new buyer needs to ensure that their insurance company will insure solar panels. We need to make sure that the solar panels were properly permitted and they have all the city or county electrical permits for it. we need to have it inspected. Obviously, home inspection is a big part of the real estate transaction. We need to ensure that your home inspector is up on all of the different solar panels and what to look for. The value of the solar panel, if they're paid for, can be included in the appraisal. In talking to various different people around the industry, it looks like the value of a solar panel is about 20% of the purchase price of the solar panel. Income. So we need to also review what's called the power purchase agreement with Idaho Power. This is an agreement to purchase power from the solar panel to Idaho Power. Now, we can't use that income for debt to income ratios, but what we do need to see is we need to see the agreement that the homeowner is going to have with Idaho Power, and if they actually have an agreement with Idaho Power to purchase power from this. Is the power purchasing agreement, or PPA, transferable? So if Idaho Power has an agreement with the existing homeowner, is Idaho Power going to allow the new homeowner to have that power purchase agreement? As a listing agent or a selling agent, if you come across a house that has solar panels, you're going to have to start asking quite a bit of questions. The first question obviously is going to be, are they leased or are they paid for? You're going to need to review title to make sure there's no outstanding mechanics liens, or if they're leased, is there a lease that needs to be paid off in order to clear up title? You're, as a listing agent and a buyer's agent, you're going to probably need to see all the contracts, and that includes the lease agreement, and if Idaho Power is involved, the Idaho Power purchase agreement. Was the product properly installed? Does it have the right electrical permits? Got to remember, we're dropping solar panels and we are tapping that into an electrical system in the house. So does the city or counties have the permits done, and has it been signed off? One other thing to look at is on the batteries. Is this solar being dropped into a battery system? Is the battery system just a bunch of car batteries all lined up? Or is it like a Tesla battery that is being constantly recharged? Moral of the story is solar panels are not something to be scared of. They are definitely going to be more and more coming around, and we just need to be educated with them and just kind of do our due diligence.